This video is sponsored by Empower. It's this cool app that can help you save and budget your money. Download the app for free. Link is down in the description below.
What's up, you guys? Welcome to the video. My name is Brandon. Today we're going to be taking a look at 3 stocks to buy going into February of 2019. I decided to come film this video here at the office today. Thank you guys all for the feedback on last month's video. I personally prefer filming in this environment versus the green screen, but I appreciate the feedback. For anybody that's new to the channel, very quickly here, guys, before we get started, first of all, welcome to the new subscribers. Thank you for supporting and tuning into the videos. And secondly, just understand here that I am a long-term investor. So I'm not concerned with what happens over the next week, over the next month, over the next year. My goal as a long-term investor is to look around and identify companies that I think are going to do well over the next 5, 10, 15 years. I'd say 5 years at a minimum. So just keep that in mind as we go through the video. As always, if you guys enjoy these videos, if you like the 3 stocks to buy, give this video a thumbs up. It really does help support the channel. But the first stock that we're going to be talking about in today's video, it's a fun one. It's the company Molson Coors, ticker TAP, and it trades on the New York Stock Exchange. And I always find it valuable to invest in companies that you kind of understand. You know, if you go out and drink the products, if you know the products well, I always see merit in investing in a company that you know. Now, Molson Coors is actually the second largest beer producer by volume in the United States, only behind that of Anheuser-Busch, the company that makes Budweiser. And this company would fall under the consumer staples category. I know some of you guys could make the argument, you know, maybe you're thinking that beer is kind of more of a discretionary item, like more of a luxury to go out and buy a beer. But for some people out there, guys, for a lot of people out there, beer is an absolute staple. Now, taking a look at their share price quickly, we see that the stock has basically fallen off a cliff, down about 43% since its highs back in 2016. I will point out here that it's not just Molson Coors. Anheuser-Busch, their top competition, ticker BUD, we see a pretty similar story, down about 40% itself. And this is coming off the back of just a weakening or just a sluggish beer market. In fact, you take a look at the revenues for Molson Coors, they've actually failed to beat their revenues in 2 out of the 3 quarters in 2019, looking at a year-over-year number. So it's a bit understandable why investors are out selling this industry. But why do I think that this is a good stock to buy? Well, because shares have dropped so heavily, taking a look at their valuation metrics, this stock is starting to look pretty attractive. The stock currently trades at a PE of 8.3, which is well below the industry average of 31 and well below its 5-year average of 24.3. We can see here with nearly a full green bar, just showing how attractive this is looking. As well, guys, price to book and price to sales, the stock is starting to look cheap. Now, where this company is lacking is in the dividend compartment. Taking a look at this line over here, guys, we see the stock is currently yielding 2.7%, which is below the industry average of 3.3. Now, 2.7% is nothing to complain about. That's still a very decent dividend. It's a dividend that I'd be happy to pull in. It's just a little bit low relative to some other companies or some other stocks in the consumer staples sector, where we do see upwards of 3, 4, sometimes even 5%. But what I like about Molson Coors, good decision in my opinion by management, is that they've been adapting to a shifting consumer preference. In particular, what I'm talking about here, guys, is craft beer. Now, craft beer has been gaining a lot of popularity over the years, and it has had a bit of an effect on some of the major alcohol producers. Now, Molson Coors has been building up and expanding their portfolio to kind of extend into these niche markets with drinks like Blue Moon, their Belgian ale. Henry Soda is another example. I know this isn't craft beer, but more niche. Creedmoor Springs is a brand that they own. It's the parent organization of Granville Island Brewing. That's here in my local town, Vancouver. They are just extending out to kind of capture this shifting market, which in my opinion is a big positive. And of course, when you have a company as established as Molson Coors, again, the second largest beer producer in the United States, I mean, they've already got their distribution networks all built up. They got their products in liquor stores all over the place. They've built up some of the most well-loved brands, not only in the States, but in Europe, in Canada as well. And where a lot of you guys will be excited, I know a lot of you guys will be excited for this, they also have the potential to be involved in the marijuana space. We've seen this, of course, with Constellation Brands being kind of the poster boy of this with their big investment in Canopy Growth. Anheuser-Busch recently partnered up with Tilray. There's been little articles out here and there with a Molson joint venture with Hexo. You know, at this point, guys, it is, of course, still very minor. And even if a deal were to get struck or they get into some sort of partnership or agreement, it would still be a very small portion or component of their business. We're still in the very early days or the early phases of these whole marijuana beverages, but sooner or later, as we're seeing, these big alcohol companies are gonna want to dip their feet into the weed sector. And investing in a company like Molson Coors could be a nice way to get some exposure and kind of keep, you know, the door open for when the time comes. Like I said, the stock currently trades for $61 USD. Again, valuation numbers are looking decently attractive here, guys. The stock pays a 2.7% dividend, and Molson Coors is our first stock to buy in February. Moving on to the second stock for today's video, it's another company that has some very well-known products, but maybe the stock is a little lesser known. It's the company Estee Lauder, ticker EL, and it trades on the New York Stock Exchange. And for those of you not too familiar with the whole cosmetic or beauty industry, I'll tell you guys, this is a very lucrative space to be investing in. When you think about just how much women and, you know, maybe some men, but majorly women here will spend on cosmetics and keeping themselves looking good. And what I love about this business, taking a look at this line here, guys, is extremely high margins, okay? Gross margins hovering around 80%. And reality is, these products are dirt cheap for these companies to manufacture or to produce. It doesn't cost a lot of money for them to go out and make a bottle of lotion or a little kit of makeup, but because they've spent years and years of advertising and just building up the credibility behind their brands that women trust and, you know, kind of desire, they have the ability to go out and charge these premium prices for some of their products. So the markups on makeup and the cosmetic industry are crazy. Now, this stock, at least compared to the last one we looked at, is not necessarily cheap. We can see here the PE of 30, but this stock has been dropping after a very nice run over the course of 2017, and I think that this may be showing signs of a good buying opportunity. In fact, Morningstar actually has the stock rated at their current price as a 4-star buy with the price target of $146. And just taking a look at the breakdown of Estee Lauder, they're involved in the healthcare space. Fragrances are a big part of their business, but by far the two largest divisions for them are makeup and skincare. And I was actually very surprised when I looked into the stock and started digging down just to see how widespread they are across the cosmetic space. Estee Lauder is its own brand, but they own brands like Aveda, Becca, Bobbi Brown, Bumble & Bumble, Clinique, Joe Malone, MAC, a big one for them. The list goes on, and I'm sure my female viewers will recognize a lot more of these brands than I do. And what we looked at just there is what I find to be very attractive about Estee Lauder. You know, you go into a store in the mall like Sephora and you look at all the products there, you'd be surprised at how many of them fall under the Estee Lauder umbrella, which makes it a very viable way to get exposure to this industry. The company as well does have a very strong balance sheet, very good at generating cash flow, and they've managed to more than double their dividend over the past 5 years. It's not a huge dividend per se at 1.3%, but it is very promising to see that type of growth. We did just have Citi upgrade the stock to a buy rating with about a 20% upside. At the end of the day, I think that this is an industry that often gets overlooked by investors, especially male investors, because it's not necessarily a product that we're thinking about all the time, but it is one that we do want to be invested in. Taking a look at the stats here, guys, the global cosmetic market has been growing at an average rate of about 5% per year over the past little while. And in my opinion, you know, kind of aside from investing, this is just like my thoughts. I could be dead wrong, but I think that the way that our society is kind of shaping out, especially with social media being such a big part of our lives and everyone wanting to look good and have kind of like this presence online where they're like picture perfect. I kind of think to the influencers like Kylie Jenner, this whole image that our generation is kind of trying to model ourselves off of. I think that a lot of people are under pressure to have that perfect look. And I think that a lot of people will spend more money than they should going out and buying products and what they have to kind of keep up with that image that's kind of becoming like the norm. Again, guys, these are just like my thoughts. I could be like completely off. On top of that, we do have to keep in mind that as the baby boomers get older and enter into their retirements, which we're seeing, they may want to go take care of their skin as well, right? Get some of those lotions on and make sure they're, preserving their skincare and health as best as they can. So that being said, I think that does make this 5% growth rate very sustainable, if not more. Maybe we'll see this increase over the coming years. And that's why I do think that this could be a good investment. Regardless, Estee Lauder with their large umbrella of brands, in my opinion, is a great way to get exposure to this field. The stock currently trades for $125 USD. Like I said, it pays a 1.3% dividend, but Estee Lauder is the second stock to buy in February. Moving on to the third and final stock for this video. You guys have been asking for more Canadian content on the channel. I am over here in Canada, so my New Year's resolution was to kind of throw in some more Canadian snippets for you guys. So here it is. This is one of my favorite Canadian stocks. This is one of my favorite stocks in general. It's the company Power Corp, ticker POW. POW! And it trades on the TSX. And let me start this video off by sharing with you guys the dividend on this stock. Power Corp is currently yielding 5.99%, so a beautiful option for any Canadian investors out there seeking some yield. And Power Corp is actually one of the weirdest structured companies out there. I shouldn't say the weirdest, but they're structured pretty weirdly. I won't be going into too much into depth with the breakdown because it really is confusing. It does even throw me for a loop. But what you need to know is that Power Corp is the holding company. They're the parent company of Power Financial, which is actually its own independently traded stock. And it's a holding company as well. It trades under the ticker PWF. And this is really where a lot of the company's profits derive. But as you can see, they do own a 100% stake in Power Energy and Sagard investment funds. But at the end of the day, what you want to think of this is it's truly a holding company. But taking a look into Power Financial, they are the parent company of Great-West Life, another independently traded stock. So this is one of the huge insurance companies here in Canada. It's actually one of the big three, along with Manulife and Sun Life. Also, if you're big in the investment scene, you may be familiar with IGM Financial. This is the company that owns Investors Group, Mackenzie Investment, one of the big mutual fund providers, and then IPC, the Investment Planning Council. So some big names here in the Canada finance space. And if we do actually flip back to the prior screen, they do also own a majority stake, 77% in Wealthsimple. I'm sure that a lot of you guys will have heard of that platform. They got those really, really cringy commercials. Definitely not my favorite commercials. But clearly, through the very complex structure that we just looked at, Power Corp can give you some very nice exposure to the wealth management space here in Canada, as well as the insurance space. Not just Canada, they also do business in Europe. They do business all over the globe. And if you don't already own any insurance companies, maybe a stock like Manulife, for example, Power Corp could be a very nice option for you because Great-West Life is one of the premier insurance providers here in Canada. And the insurance industry is really an evergreen industry. And typically in a rising rate environment, which we are in, banks and insurance companies really tend to benefit from that. And there are multiple reasons why, but really the main reason is an insurance company, for example, they have pools of money. They have a lot of money kind of just sitting there waiting for when it needs to be paid out, right? When necessary. Now that money is not just sitting there in cash, because that would be a pretty big waste. They actually invest that money. They invest that money very, very conservatively. I'm talking like as safe as it gets. Now, as interest rates rise and the risk-free rate starts to get a little better, you're getting a better yield on this, that simply means that this big pool of money that they have sitting there is going to start to generate them a higher and higher yield. When you have so much money, like a huge pool of money, even those small incremental increases make a huge difference when we're talking here millions or billions of dollars. And that's not to say that this is only a good stock to invest in during a rising rate environment. I think that Power Corp is a great stock to hold pretty much any time for the long term. And like I said, it's one of my favorite stocks out there. And currently yielding a 6% dividend, that's kind of hard to pass up on, guys. We'll just leave it at that. The stock currently trades for $25 Canadian. Like I said, it trades on the TSX, and Power Corp is the third stock to buy in February. So guys, those are my 3 stocks for the video. What do you think of my stock picks for the month? Do you like them? Do you not like them? Let me know your thoughts down in the comment section below. And for those of you guys that have stuck around for the video, I do have a very special announcement. I've decided to do a little giveaway, kind of like a promotion here on the channel. I'm gonna be giving away 1 full year membership into our private membership group for free to one of you guys watching today's video. All you guys have to do is give this video a like, make sure you're of course subscribed, and leave a comment down below. Comment, tell me what you thought of this video. Let me know what your name is. Let me know what your favorite stock is, how long you've been investing for, or just say hi. Just leave a comment down below, like the video, make sure you're subscribed. And this is actually, in my opinion, a very valuable giveaway. This membership is worth over $340, and this is a way just for me to give back to you guys. I appreciate you watching the videos and kind of engaging. It helps support the channel when you're out dropping videos or sharing the videos. So I think we'll give this a shot, guys. If it goes well, maybe we'll do this every month on our 3 stocks to buy video, but I'll be going through and picking a winner from the comment section below. Maybe if it's the funny comment, I don't know, we'll see. But I will be announcing the winner either on the next video or maybe on next month's 3 stocks to buy video. I'm still yet to decide this. But as always, if you guys enjoyed the video, feel free to give it a thumbs up. If you're not already subscribed to the channel, I post a video every Monday, so subscribe and make sure you hit the bell for notifications. But as always, I thank you for watching. Hope you enjoyed this month's video. I'll see you in the next video.